What's going on, YouTube and cryptocurrency family? My name is Harry. I'm a crypto vet. Thank you for tuning back in. Wasn't going to make a video this weekend, but I saw that the markets were turning even more red, and I had a couple other questions in the Discord, so decided to make a video today anyway. So if you like that, if you like the content, please hit the like, hit the subscribe. I'd really appreciate it, and it helps build the channel. And again, I appreciate everybody's support in this whole project here. If you haven't already, follow me on Twitter at XRP Veterinarian. Links for Twitch, Discord, all the other goodies are down below in the description. But if we go ahead and get started here, we can go to CoinMarketCap and we can see, let's hit the refresh real quick. CoinMarketCap is down to $1.446 trillion. Bitcoin dominance is going up slightly. And this is because as Bitcoin is dropping, everything else is dropping much faster. And this drop right now on the weekend is, can be kind of a false flag because the amount of volume on the weekend is much less compared to the weekdays, even though crypto is traded 24/7. So this decrease in the volume can have much higher volatility during these times. So, we could see these big swings back and forth, but, just sit back and just enjoy the ride is my best opinion. Because remember, I'm just a doctor/idiot. This is not financial advice. So, make sure you do your own research. This is just my take on the market from experience, history, and I guess my diary of how I've been trading. If we look at the biggest gainers so far, we have just very few, and biggest losers, the list goes on and on and on. If we head over here to the Bitcoin dominance, we can see that Bitcoin dominance is pushing up above the 20 daily exponential moving average. And this is just because, again, alts are bleeding much more than Bitcoin. If Bitcoin finds a bottom, then we could potentially see them recover from there. This Bitcoin dominance getting slightly above the 20 daily. We still have 4 hours before the candle closes, so we could see us get rejected here just like we got rejected at the 50 or the 49.29 point up here, but we just need to wait and see. Preferably I'd like to see a weekly candle close here and see how it goes, because right now we had this bullish engulfing candle, but now we came down, but we're dropping below a key support that we need to hold, or resistance as far as Bitcoin against other coins. So we'll see how this weekly candle closes tomorrow night. Looking at Bitcoin or all cryptocurrency in general, market cap, we can see that we had dropped below this key level of volume support right around the $1.5 trillion mark, which is also the 236 on this fib retracement. But we do have good support down below, all the way down to about 1.35 trillion. So I don't think we would drop too much lower than that. This would equate to roughly around a 30 to $31,000 Bitcoin is when we were right at these levels. So just numbers to keep an eye on, but this is very indicative that we could be finding a good bottom with these big wicks coming down here. Even if this was the last bit of a bigger correction, we would still find a bottom somewhere in this level, and then that would be the point that we would come back and bounce up. So, as long as you got patience, you will have a lot of potential to make money in these markets. On this here, I have the Bitcoin on the weekly, and we'll zoom into this part here because I know this is hard to see, but I know a lot of individuals asking about the Wall Street cheat sheet. And the Wall Street cheat sheet is a very good indicator as far as comparing price versus time and the psychology of people buying and selling during a market cycle. And these market cycles can be broken down to very small time frames or very big time frames. And I'm going to just kind of give you a quick example, because a lot of people use the whole rally as a whole and are saying that we were at the top due to us being at the euphoria stage here. And I tend to disagree with this theory, and I'm just going to go over that really quick. So if we kind of look at the Wall Street cheat sheet here, and I have it to where it's connecting directly to my beard on the video, so that made me smile. So I'm going to leave this guy right here. But if you want a picture of this, you can just Google it and see it. But down here we have disbelief, hope, optimism, belief, thrill, euphoria, and then as we hit the top, we come down to complacency, anxiety, denial, panic, all the way through. And you can see that we have our specific low here. So this would be where our disbelief starts to begin. We start to have our hope. Then our optimism is when we broke our all-time high. Then we are into belief, thrill, euphoria, and then now we are heading down into complacency, anxiety, denial, panic, and we're getting to where we could be heading into anger and depression right now. So that would mean that we are at the end of this market cycle, right? Well, I can take this same exact market cycle right here, and I can actually make it happen in this little section here, right? I can make it happen in this little area here. It doesn't matter which price or time frame you use it in. It's just letting you know that as something gets more popular, more people think that it's the smartest thing ever. And to put that into perspective, we'll zoom into this part on the daily, and we can see we have that same mark back in September. We've been rallying up. We have bearish crosses here on all of our moving averages. The dailies going over the weekly, and now the 200-day simple moving average, the slowest of all of them, is getting to be on the top. This is indicative of us being in a very, very bearish market. But if you watch my video from I think it's yesterday or the day before, I'll have it posted right up above here. If you watch this video, I go over how this whole thing is exaggerated due to like things with Elon Musk, the coronavirus, and a whole list of other things that kind of just throw the market off. Well, if we look at this here, we have our pump going up, and we can see our downtrend right here at the top. So we came down, had our complacency, and then right here we had our anxiety, then our denial, and then our panic, which has the big wick to the downside. So right now we are somewhere in anger and depression, or potentially still like letting the panic play out. But either way, afterwards, we just go through some sort of consolidation at these prices before we restart this whole thing back up. And if we were to restart this thing back up, we would be able to do it before the end of the year, which would correlate with every other cycle ending roughly 4 years apart due to the Bitcoin halving. So, even if we were to see $20,000 Bitcoin, we could still be seeing something much, much bigger in the near future. Like looking here at Bitcoin from 2017 to now, we can see how we can barely even see this date back in April of 2017, even though the price action was exactly the same as to what we're seeing now, large 40-50% corrections. Well, if we come back to this point here and we're watching the price action go up, you can't even tell what happened over here in 2013. It's just a straight line. So if we come to here, I think here in the next 10 years, this is what the chart's going to be looking like as far as Bitcoin goes, because we're going to be looking at prices way up here, $250,000, $500,000 USD. So this is why I think it's just, don't worry about these really, really bad days. If you just wait for the long run, and long run may not be as long as you think, 4 to 5 years maybe. Next cycle is all it would take for some, and you could have complete life-changing wealth, because people who bought in right back here. This was $3,000 all the way up to $60,000. Those are huge returns. So just something to keep an eye on. And I put these ghost bars on here to just kind of mimic what the anger and depression would look like. And this is also keeping in line with a big bull flag or big symmetrical triangle going from like 1, 2, 3, 4, 5 and breaking out to the upside. And this continuation pattern matches with the idea that we would hit 250,000 and then $500,000 Bitcoin by the end of this cycle without any issues with inflation or anything like that, just purely due to how the cryptocurrency works in itself. So that's going to do it for Bitcoin on the macro trends there. If we're kind of looking in on the short term, we can see that Bitcoin here is still within this Wyckoff accumulation pattern. If we stay within this range, it's very possible that is going to come to fruition. But the second we break below and set a lower low, this may not be it would be invalidated at that point. But here we show the bullish breakout target plus a bearish breakout target. And since we do have this one resistance line right here, I went ahead and measured it to be -6 degrees, so that way I could help project what a actual symmetrical bear flag would look like at this point. And so we have this bottom blue line here, which would be if it was exactly 6 degrees the opposite way. So we could be dropping down to somewhere like $32,000 and still be in a potential bullish pattern, because these bear flags tend to continuation and break to the downside. But in a bull market, this is on a shorter trend compared to the macro bull trend. So this could still break to the upside. So it's probably more like 50-50. The key is, do you break below or above these supports? So, I'm going to keep an eye on this over the weekend. We did break down below this, which was our initial one, and we did technically confirm it. So we could be seeing it drop all the way as low as this $24,000. But at that point, if we stay there too much longer, we were most likely going to head into a bear market. We need to stay at least above this like $30,000 price range, in my opinion, to stay bullish. But markets are tight right now, so it wouldn't take much money or volume to really change the narrative. But that's going to do it for Bitcoin. Let's take a quick look at Ethereum. I'm using that same angle theory there just to keep things more consistent. I put a trend line up at this point just so I could drag it down to see where we could potentially get as far as support for Ethereum, but I wouldn't even worry about trading anything else until Bitcoin decides what it's going to do, because if we do go down, you could see 20-30% decline on Bitcoin and then 80 to 90% on one of your altcoins. And if you can't push through and hold on till it potentially goes back up in value, because it may not ever go back up in value, then you're going to have to sell at a loss. So I'm only taking a look at these just to see for some key levels if I was going to take profits, or not take profits, if I was going to sell just for maybe tax reasons. I think that point has passed now, but if you did have some sort of extension, you could do some sort of wash trading with Bitcoin to help generate capital, alleviate some profits that would be taxed. And there's a lot of benefits to that, specifically with cryptos, because you can't do this with stocks or securities. That's against the law. But keeping the eye on Ethereum, if we did break to the upside, we could see $4,000 Ethereum again. A break to the downside doesn't look very, very good, but it takes us back down to around $1,000 per Ethereum. I think about right there. Yeah, it's $1,000. So, it doesn't look very, very good. Looking at XRP, very, very similar. I think it's the same exact thing with Ethereum and Bitcoin. We have to just wait and see. But if you look at this rally that we had back here in 2017 for XRP, this little section right here is not even what we're in yet. We are in this section here coming up, and then now we will somewhere potentially either be coming into this section here soon and then consolidating, or if we are in this section already, we will stay here for a while before we see our last pump, which would be, I guess, around January of next year. But I don't think that's the case. I think we are actually in this little guy down here, and then just like with Bitcoin, eventually the chart's going to look something crazy like this, really small, because we're going to be up in the hundreds or tens, 50s, whatever you want to call it for XRP. But for now, we need to get back above the 236 for me to feel comfortable, which is right around 88-90 cents. But again, we could come all the way back down to retest the 63 right around here, because this is right where this is resistance, and then now hopefully support. So we'll see where our XRP goes. Just like with Bitcoin, we can do the Wyckoff and everything, but everything just pretty much lines up. We have some sort of uptrending support, some sort of downtrending resistance, but we're also within sideways accumulation for who knows how long we'll be here. But we'll keep an eye on it. We'll see if anything changes over the weekend. All it would take is another tweet or something else to completely turn the markets another way. Who knows? But until then, I'll catch you guys in the next one.